All right, here now is Michael Bright, Structured Finance Association CEO and former acting Ginnie Mae president. Michael, good to see you. Talk to me about the impact of investors coming into the single-family home space and competing with actual families. I would think it's driving up the cost of homes across America.
Oh, hey, Sean. Great to be with you. I did hear that segment about manufactured housing and some of those rent increases. That's very disheartening to hear. My heart goes out to those families and those individuals. You know, manufactured housing is often the only option that a lot of Americans have for getting decent shelter, and makes a lot of sense for some Americans. But as noted in that segment, I think there are a lot of complexities to manufactured housing specifically, of course, that, you know, you buy the home, but not the land. And so sometimes it's shadow lending, and people try to kind of figure out how that works. To complicate matters really in that space, it can be difficult to borrow for manufactured housing just because the loan rates are, the loan dollar amounts are quite low. So consider, for example, you know, manufactured housing, let's say, costs $45,000, but there are some fixed costs to underwrite a loan. Sometimes those costs are in the $3,000 to $4,000, even $5,000 range. A lot of that's due to the regulations that go into underwriting a loan. When you look at that as a percentage of the overall amount, it can be very high, and so that's prohibitive. And so really pretty complicated picture, but those type of rent increases, I feel terrible about it. I hope that doesn't continue to happen.
Well, Michael, what's not complicated is the fact that you have institutional investors that are using financing from Fannie Mae and Freddie Mac in some of these deals. So you have government-sponsored enterprises that are really put out to, help the family buy a home, guarantee their mortgage so they can get the loan. But here you have these big institutional investors using Fannie and Freddie to actually cut these deals, and you're driving the family actually out of the ability to buy a home. They can't afford it any longer.
Yeah, so interrelated, slightly different, but interrelated issues. The first is that Fed policy really over the past 10 years has been designed by purpose. I mean, they haven't been shy about the fact that lowering interest rates is done in part to increase asset prices. The idea there being the so-called wealth effect, which means if you have assets, whether it be stocks or homes, and those are going up in value, you feel richer, you're willing to spend some more. Since the great financial crisis and they're trying to juice the economy, this is one of the things that they were after. Well, the problem with going after wealth effect through asset prices is that for folks who don't have the asset, it becomes further and further unobtainable. So I actually think that while inflation is something that we avoided for a long period of quantitative easing or federal monetary policy until obviously right now, which we've talked about a lot, one of the, I think, more lingering effects that historians are going to be studying about this period is the income disparity that was caused by the fact that the Fed really focused on asset prices. Now, the single-family rental piece, specifically, I think the one that you're talking about, in 2017, Fannie Mae approved a multi-billion-dollar loan to Blackstone and a subsidiary of theirs. There was immediate blowback for both sides of the aisle, rare occurrence. I think you were there during that, and you were part of that blowback. Luckily, fortunately, they retreated from that deal. There are some single-family rental companies that are solutions to this problem, meaning they know that homes are unaffordable for a lot of Americans, and so they want to help. But some of those larger institutional investors, particularly the ones that in 2017 got money from Fannie Mae, and that was a head scratcher for a lot of folks.
And Michael, I get it with multifamily housing units, but I don't get it for single family homes. If Fannie and Freddie are being used for institutional investors to compete with the average family, I think that is a step too far. And that was not the intent of the program. Michael Bright.
Outside their scope, for sure.
Always great to see you. Thank you for joining me.
Good to see you, Sean.
All right.